Did you know the VA loan has no credit score requirement? Chances are, if you're watching this video, you've had some unfortunate things happen to your credit profile, and maybe you were told by a lender that you need to go fix yourself. The problem with this information, though, is they tell you to go fix something you know nothing about, leaving you to waste time going a direction that probably isn't even the right one. In this video, I'm going to teach you, the veteran, who may have stumbled at some point with their finances, how to qualify for a VA loan, even if you don't have the best credit. Before I do jump into that, though, me and my team get called every single day from veterans just like yourself who are trying to navigate the VA loan process. So if you want to get help from a team of individuals who specialize in helping veterans go through this entire process, give us a call, shoot us a text, or set up a discovery call with us. We're happy to help. So in the beginning of the video, you probably heard me mention how the VA loan does not have a credit score required, which is true, but there's a little bit of an asterisk that you need to remember with this. You see, the VA actually does not do loans. The VA is who guarantees the loan, thus meaning that the VA will have guidelines that are set that lenders must follow more on a minimum basis. But if a lender wants to add what's called an overlay or an added restriction on top of that, they can do that. So this is why you'll hear some lenders say the VA loan will require you to have a minimum credit score of 620 or 640 or 660. The problem with that, though, is they're not really telling you the full truth. They're just telling you what the minimum credit score is with them. You see, some of the most well-known veteran-centric lenders out there, ones with the word veteran in their name, or ones with a branch of service attached to their name, or some even using the overall saying of the United States in their name, will have a minimum credit score. And their credit scores are going to range anywhere between 620 to 640. If you don't believe me, you can look this information up yourself just from a basic Google search. That will pretty much tell you exactly what they are going to require. There are actually lenders out there that will allow you to go at a much lower minimum credit score. For example, me and my team can work with veterans as low as 580, but we've also helped veterans that have credit scores of below that, which I'll get into a little bit later and show you exactly how this works. One of the other things that goes along with qualifying for a VA loan is going to be debt to income. But the problem here is the VA loan actually does not have a debt to income ratio attached to it as well. The VA loan uses a little thing called residual income. And this is set based on where you're at geographically, which could be Northeast, it could be South, it could be West, and Midwest as the 4 regions that it uses. Then what it's going to also use is your household size. For example, if you're a family size of 1 versus a family size of 5, the VA is going to require the family size of 5 to have more money left over after all of their bills are paid that's on their debts and their potential new mortgage. But a family size of 1, or just one individual that is going to be buying this property with the VA loan and the only person living in the home, the VA is okay with a little bit less money left over because, again, it's not as many mouths to feed. So it's not as much of a responsibility to have money left over for several people. With doing this residual income calculation, though, it actually means that the debt to income does not matter. But again, that's if lenders want to follow it. For example, I have seen veterans be able to purchase a property with the VA loan with as high as a 65 or 70% debt to income ratio. If that veteran was trying to purchase a property with any other type of loan, they would not essentially be able to buy a house. You see, FHA is going to require you to have at least a 57% or less debt to income. Conventional is 50% or less. And then when you get to USDA, it's 45% or less. So the VA loan has a lower barrier of entry. But again, if a lender decides to have an overlay on top of that, then that can make it a little bit more difficult for you to qualify, even using your VA loan with them. Me and my team do not use debt to income ratio to determine what you would qualify for. We use the VA's guidelines, which is the residual income chart that I was referring to earlier. The next thing we need to talk about is going to be the underwriting system. The underwriting system can be done in an automated fashion or a manual fashion. The underwriting system is created by 2 government agencies. One of them is known as Fannie Mae, which is the Federal National Mortgage Association, and the other one is Freddie Mac, known as the Federal Home Loan Mortgage Corporation. These are government-sponsored enterprises that play a huge role in the housing market. See, they purchase mortgages from lenders, which frees up more capital for them to do more loans at a lower cost and lower barrier of entry. Both offer an underwriting system, which is there to determine risk. They are using this system to basically submit a loan in an automated fashion and provide the loan officer or lender with a pass or fail grade. Based on these guidelines, they will determine a risk that determines whether or not you are a well-qualified buyer. But every loan still must go through the manual approval, even if they got that pass on the automated system. Typically, if somebody did get a pass on the automated system, they don't actually go through the manual approval until when they go under contract. Thus, you would be already pre-approved. You'd find a property, get that property under contract. And then once you're under contract, they are now going to submit your loan to the physical underwriter, which is what's known as the manual underwrite process. But what about if you are trying to get pre-approved and you actually don't qualify based on what the automated underwriting system says? Does that mean that you're completely denied? Well, no. You see, the manual underwriting system or manual underwriting process can be done if you do not meet the automated underwriting system's scale. But there are going to be certain things that you must meet as specific requirements to determine whether or not you are a strong enough borrower to qualify. You see, a manual underwrite is typically done up front when an automated approval is not given, thus kind of like a fail grade. But again, that does not necessarily mean that it is not a good loan. It's just something that maybe the automated underwriting system doesn't like. And this could be caused from things like late payments on your credit, collections, charge-offs, maybe a past bankruptcy or a foreclosure. When you're going through the manual underwrite process, this is going to require information proving to the underwriter why they should overturn what the automated underwriting system says. And we'll talk more about that next. Before I share with you things that you're going to need to help overturn the automated underwriting system, I have to ask you guys a question. Have you gotten value from this video so far? If you have, can you do me a huge favor and hit the like button down below? What this does is it tells the YouTube algorithm that this information is valuable and allows it to get shared to more veterans just like you who need to know this information. And if you want to continue to learn more about the VA home loan benefit, tips, tricks, and hacks that help veterans leverage the VA loan, subscribe to the channel and join the community. This entire channel was created for you to really just have the empowerment and knowledge that you need to maximize your VA home loan benefit. So let's talk about what the underwriter is going to look at in order for them to overturn what the automated underwriting system has given them. What they're first going to do is what's called a verification of rent. If you're currently renting right now and you're going through the buying process, the verification of rent is going to allow them to look at the last 24 months by getting information from your current landlord or from the apartment complex that you're renting with to figure out if you have been making your rental payments on time. They use this in a way for looking at how you'll be if you're going to be a responsible homeowner and paying your mortgage on time. 24 months is the requirement based on the VA guidelines. What they're also going to require is what's called a letter of explanation for any derogatory marks that are showing on your credit. This is for things, as I mentioned before, like any collections, charge-offs, or late payments that could be reported on your credit. If you've had a foreclosure or a bankruptcy, those will require a letter of explanation as well. When doing this letter of explanation, it's a little bit more than just simply saying, I forgot or I missed the payment because of, this. And it's really what you want to do is show that you're taking responsibility for kind of what caused it. Now, don't get me wrong. Sometimes people have late payments that get reported on their credit and it legitimately was not their fault. Like I've seen cases where it's the creditor's fault. I've even gone through those situations as well. But if you are able to fight back on some of those things with that creditor and show proof that the creditor took ownership of it, then that's great. If you're not, what you want to try to do when doing these letter of explanations is just showing, one, what caused this to happen in the first place, and two, what you're going to do to help prevent it from happening again in the future. By doing this, this helps show the underwriter that you're understanding of what has taken place and it is something that's important to you versus just simply saying, I forgot. One of the other things that they're going to require is going to be compensating factors. Compensating factors are things that help show strength in the file, again, to also help overturn the automated underwriting system. One thing that it's going to look at is whether or not you've had a conservative use of credit. Meaning if you have low consumer debt versus how much money you have coming in. If you have a high consumer debt amount that you have going out every month versus the amount of money that you have coming in income, that's going to look a little bit more riskier. Another thing they like to look at is you have long-term employment history. This is not necessarily that you've been at the same employer for the very long time. It's more about whether you've been in the same line of work for a very long time. This shows strength and security as well, because God forbid something does happen with your current employer, there's a high likelihood that you're going to find employment in that same field in a very quick fashion, thus not really having you miss potential mortgage payments on your property. Another thing that they're going to look at is going to make sure that you don't have a high increase in your new shelter expense. For example, if you are renting a property for $2,500 and your estimated mortgage payment on your new property that you're looking at buying is $35,000 or $4,000, that's a very big gap. And now what this looks is very risky because you don't have any experience paying a mortgage or even paying for a monthly liability of this amount. But if your mortgage payment is looking like it's going to be $2,500 and you're currently renting for $2,500, even if it's like $2,250, that actually does not look as risky because you have history of renting or paying a liability and a responsibility of that similar amount. Some other things that they're going to look for is if you have a high residual income amount. Earlier in the video, I told you guys some of the things that go into how the residual income requirement is calculated. Well, if you meet the residual income amount by a very large sum, let's say 30, 40, or 50% over, this looks a lot more secure and it looks like you're going to be put in a position to succeed, allowing you to have more money left over to pay off all of your other bills in a comfortable fashion. Another thing that they'll look at is going to be the low debt to income ratio. Now, again, the VA loan is not a debt to income ratio based loan, but when it comes to doing the manual underwrite route, they're going to look at compensating factors to just help overturn the underwriting system. And you want to make sure that you have as many of these compensating factors on your side to help you qualify. There's several other compensating factors that go into it, and I could be here all day talking about them, but I can tell you this. The most simplest way to qualify for a VA loan, regardless of what your credit, is going to be making sure that your shelter increase is not a very large amount, as I was explaining earlier. You don't have a lot of money really going out towards consumer debt versus how much money you have coming in. And another one is going to be making sure that you really haven't had any late payments within the last about 12 months. Now, sure, you may have had several late payments in your past, but if you haven't made a lot of late payments or really any late payments at all within the last 12 months, there's a high likelihood that you could get a manual underwrite approved. I helped a veteran purchase a property who had a 540 credit score. He had several late payments, including a bankruptcy in his past, but that was all several years ago. He currently had more than enough money coming in. The property he was trying to buy was a similar monthly payment as his current rent that he was already paying. His rent was actually about to go up, which is why he was trying to buy a property to begin with. And he also did not have a lot of consumer debt in terms of money that was going out versus the amount of money that him and his family was bringing in. This is what made his file able to be pre-approved and essentially be able to become a homeowner once he found a property, regardless of what his credit score was. Guys, I hope this video was helpful and I hope this provided you guys with some value on what you need to have in your situation in order to qualify for a VA loan, regardless of what your credit score is. If you want help and you are trying to go through the manual underwrite process and you want to get it from a team of individuals who's helped hundreds of veterans just like yourself go through this process, give us a call, shoot us a text. We're happy to help. And if you want to learn more VA loan basics, tips, and tricks, watch this playlist up here and it will help you leading to using your VA loan in the future.